Hey everybody, today's April 23rd, and today we're going to look at the price of Bitcoin. So over the past couple of days, Bitcoin has been hit pretty hard, and as of today, from the top, we are down about 22%, and at the bottom, we were down almost 27, around 27%. So the question is, will Bitcoin continue to fall lower, or are we going to be able to hold this level and continue higher? Before we begin this discussion, please read this disclaimer, and you can pause this video as you read it. So of course, Bitcoin has been tumbling quite a bit, and we talked about how over the past couple months, we've seen a bearish divergence, right? We've seen the price of Bitcoin go up as these oscillators have been coming down, right? RSI, so that was the MACD, this is the RSI. And we talked about how this is a bad thing because when the price goes up and the oscillators go down, we have what we call a bearish divergence in the technical charts, which means that the buying momentum is starting to wane even though the price is going up. So there's not much conviction from the buyers. And this could be more of like a distribution area where we're starting to see sellers coming in and keeping the price from going a lot higher. And so the question is, are we going to be able to find enough strength to break out above? Because right now we're starting to form lower lows, right? We have a low here, and now this low that we made in the last 24 hours is lower than these two lows, right? And we're probably, even if this thing comes up, if we do end up going lower, this will be a lower high as well. And that's going to be bad because that means we're starting to change the direction of the trend, right? If that happens. So what we really need to see is we need to see the price push up from this level and find some support at the very minimum and perhaps go up again and try to retest this Fibonacci level, right? I talked about the importance of Fibonacci levels. In the past, Bitcoin has either hit resistance or found support, right? Support here, support here, support here, right? We already tested this level, which is around 47,000. So of course we have a nice wick off. We didn't touch this Fibonacci level, but we just we came down just above it. But now we have some buyers coming in and pushing the price up, which is good, right? And also we're above this moving average, which is our midterm moving average. I told you guys in the last video, in the last few weeks, that in this whole run-up since this breakout in October, we've held the 50-day simple moving average, which is the silver line, right? In fact, when we came down and we bounced off this line, it was a very strong bounce. And over here, we had a strong bounce, right? In our last video, I talked about how we want to hold this level and that we were basically trending in dangerous territory because we were under this line. And of course, we didn't hold, so we came down. Now we're testing our midterm moving average, which I talked about was around 49,000. Right now we have bounced above it, but we need to see if we can close above it. What I want to see is us close above this gold line, this 100-day simple moving average line. And hopefully we can find some support and bounce up above and then try to see if we can break through the 50-day simple moving average. And yeah, so if we can't hold this level, then of course our next level is going to be the Fibonacci support level down here, which we held over here back in late February and early March. If we can't hold this level, I'll have no choice but to turn bearish because objectively speaking, we will be entering a downtrend, lower high, lower lows, right? If this happens. Now, even though that's not a good thing in the short term, if we look at the past, we can see that there is one pattern that we saw in 2017, which was when we had our big rally that year. This may look very similar. So we could be following something that looks very similar, which is back in May and June of 2017 when we had this spectacular rise up from 1,000 to 20,000. We saw Bitcoin basically, and pay attention to how we look at this price action and how it compares later. When I flip back to today's chart, we basically came up. We came and we test the 50-day moving average, which I talked about, that silver line, right? That's just our short-term moving average, and we kept hitting it, and eventually we couldn't find enough momentum to bounce above, so we ended up crashing below. And what happened was we came down to our midterm moving average, which is this gold line, and today we're basically around where this line is. But just pay attention to how the price action looked in the entire year, right? In the entire year of 2017, right, when we had our mega bull rally, right, up to 20,000, we never broke below this blue line. And what is that blue line? This is our long-term moving average, which is the 200-day moving average. And really, this is a standard in terms of technical analysis, not just in cryptocurrencies, but also in the stock market, right? A lot of professionals, they'll look at the daily chart. On the daily chart, the 200-day simple moving average. And if the price breaks below this level, then generally a lot of professionals start selling. So it's very crucial that we hold this blue line on the daily chart, right? And we looked at 2017, we did come down every once in a while. Even though we broke below the gold line, we usually we recover very quickly, right? Recover very quickly. And as the trend became more parabolic, every pullback just became less and less intense, right? Like this pullback was down closer to the blue line. This was less close to the blue line. This one was just barely below the gold line. And this next pullback that we had in November of 2017 just barely touched this 50-day simple moving average. We didn't even come down anymore. So I think that right now where we are today is looking very similar to the pullback that we had in June of 2017, the summer of 2017, where we failed to hold this level and then we just saw a big plunge down. But eventually buyers stepped in and pushed the price higher, right? But we basically closed between the gold and the blue line, right? So if we come back to today, where we are right now, we just dipped temporarily below this gold line, which technically is between the gold and the blue line. So if we follow that same pattern, we should be able to find some support and come up higher. Worst case scenario, I think that we might see a short-term bounce and then see this thing roll over, maybe spike a little bit more, and find support around 40,000 before we push up higher. And this is not necessarily a bad thing too, right? Because not only is it between the gold and the blue line like we saw in 2017, but this would bottom out where we had our previous high back in January, where we peaked and we had that correction, our first major correction since we started this huge rally since October of last year. So I like these levels because I like to see resistance flip to support, right? That's very bullish. If we can come down, if this thing does happen to roll over and come down even more below this Fibonacci support level, down to 40,000, I like to see this support hold, right? Flip this resistance to support. And I would be very bullish, especially if we have a lot of buying coming in, pushing this higher, putting our oscillators higher, right? Because right now our oscillators are going down. We want to see this flip light red, and eventually turn around, push up higher, right? We want to see more buying momentum coming in. The RSI right now, getting close to oversold. We want to see this thing come up, right? And break this downtrend. Because right now it seems like we're starting to fulfill the bearish divergence trend. So at the very least, I want us to hold this goal line, and we'll have a chance to come up and test this 50-day simple moving average, right? If we don't hold that, our second line of defense is this Fibonacci level, 47,000. If we don't hold that, of course, this long-term moving average, our blue line, we want to see this hold like we did in the past in 2017. I just showed you guys how when Bitcoin pulled back in 2017, the worst it pulled back was in between the gold and the blue line. So anything between this level, I think that if you are looking to buy, that could be a good buying opportunity. Of course, this is not financial advice and you have to do your own research. For me personally, if I am buying this dip, I would wait to see if we can actually hold this. We might see a temporary bounce because we come down so hard. We might at least see a technical bounce, right? The question is this bounce going to hold, or are we going to roll over and come down even more? Or is this going to be at the bottom and we continue higher? I don't know that yet. We need to see how this chart develops going forward, and I'll definitely update you guys next week. Just very quickly, I want to talk about what certain catalysts that happened. Yes, so yesterday the stock market got hit pretty hard because Joe Biden, the president, talked about raising capital gains taxes. So that hit the market pretty hard, and Bitcoin, obviously, there's a lot of people who tax capital gains is going to affect them. So we saw some profit taking yesterday. That pushed the price a little bit more, but the stock market actually is recovering today. The stock market is open right now, so that's taking a little bit of pressure off this pullback right now. So even the mining stocks are up today, even though the mining stocks usually follow Bitcoin down, but even more substantially, more volatile, right? So another thing I want to talk about is the dollar. Dollar is still coming down. So this is another thing that we talked about this many times in previous videos, that when the dollar comes down, Bitcoin usually has a good year. And when the dollar comes up, like in 2018, Bitcoin usually has some volatility or is in a bear market, right? So right now, there was a worry that Bitcoin might follow a pattern in 2018 where it goes higher. And we all know in 2018 that Bitcoin was in a bear market, right? But right now, this pattern is starting to be nullified. We broke above this rectangle, but then we got rejected and pushed down. So dollar does seem like it's coming down even more, especially today. And that's another reason why stocks are up today, right? Less downward pressure because the dollar is weakening. But that's also good for Bitcoin because Bitcoin usually performs very well when the dollar comes down. So that's giving me hope that we are closer to a bottom than we are from going down even more. And if we can hold this level, especially this Fibonacci level, right? If we can hold this level like we did here in March, then we have a chance of going up higher. But if we do roll over and come down lower, I do think that Bitcoin will end up bottoming above the 200-day simple moving average, or this blue line, but probably below the gold line if we don't hold this Fibonacci level, right? But that could also be a good buying opportunity, just to summarize again. I want to end this video with the price cycle top indicator. Of course, we talked about this in previous videos, how when this crosses, and we had a cross last Tuesday, right? We had a cross last Tuesday, and of course the price is coming down. And so it does seem like this is coming true in terms of predicting at least a pullback, right? Not necessarily a bear market like we had last 2 sessions, but just keep in mind that if this is not just a way to call a top, but it could also be a way to figure out when to buy back in, right? So when this price came down below and we had a cross, but when this crosses back and the green line is positive again, that's usually a good time to buy back in, right? Now, interestingly, even though we had a cross recently, let's zoom in a little bit, right? We had a cross. So usually when the green line is above the orange line, the trend is bullish, right? But when the orange line is above the green line, that's when you want to sell, right? According to this indicator. But the fact is, Bitcoin is starting to come down now. So we might actually see, even though we had a cross here, we might actually see the green line cross above the orange line again, which is actually bullish. So if this thing does correct down even more, we might actually see a positive cross, and that could be a signal to buy back in, which is funny because this is only happened a couple days ago that this thing crossed bearishly, right? So if this thing crosses and this thing crosses again, then this could be an opportunity to buy, right? Especially if the price comes down below these lines, right? So when the price comes down below, like we did here in mid-2013, that was a good time to buy. And especially when the green line crosses above the orange line, that's when the trend is likely to reverse and go up higher. So we'll definitely update you guys next week looking forward, as it looks like this green line might cross back into bullish territory, which could signal a possible buying opportunity. But I definitely got to see how the price action develops going into next week. So I'll update you guys on Monday and see what happens over the weekend. Hopefully we're able to hold this level and push up higher, but if not, we might roll over, but I think we'll find support above this 200-day simple moving average, which today is just under 35,000, right? So either this, hold, push up higher, retest this level, this Fibonacci resistance level, or we come down sharp, but I think we hold the 200-day simple moving average, or the blue line. So update you guys again next week. Thank you for watching this video. Please like this video, leave a comment below, and subscribe for updates if you found this video helpful or informative, useful. Thanks again, and I appreciate your support. Have a great weekend.